We're good. Okay, we'll call this meeting to order. And I'll ask Deacon Robert to do the opening prayer. Did you know you were doing that?
Yeah, that's fine. In the name of the Father, the Son, and the Holy Spirit. Amen. Heavenly Father, we just give you thanks and praise for gathering us together this day. Thank you for the gift, the many gifts that you bestow upon us. We thank you for calling us to work in this small corner of your vineyard of Catholic education. And we just pray that you would pour out your Spirit upon us, that you would lead us and guide us in all your ways, so that we may always seek to do your will. We ask this in Jesus' name. Amen.
Amen. Thank you, Deacon Rob. Land acknowledgement, Dr. Zurchny.
Before we begin, the Medicine Hat Catholic Board of Education would like to acknowledge that we are gathering on the traditional land of the Blackfoot people, who have welcomed here for centuries the Cree, the Métis, other First Nations, and non-Indigenous people. The land is now recognized as the traditional territory of Treaty 7 to the north, west, and south, and Treaty 4 to the east. Medicine Hat Catholic Board of Education also wishes to thank the First Nations people, past and present, for welcoming us here.
Thank you. Okay, we're going to the approval of the agenda. We have one addition on number 6.1, correspondence item, which will be in camera. Any other additions to the agenda? If not, can I get approval of the agenda? Mr. Kinch? All in favor? Thank you. Okay, we are going to go into the audited financial statements.
Thank you. So the audit committee met on November 24th, and they have a recommendation for the board to approve the financial statements. The recommendation is outlined within the agenda. In terms of process, Delane Sackman from MNP, who is the partner with the audit, will be providing an overview of her findings as well as the opinion on the financial statement. Amanda McCree will be providing an overview of the financial statements themselves and will be able to answer any questions that trustees might have. So I'm going to turn it over to Delane to kick this off.
Opening the act. No
Yes.
You don't even have to sing and dance.
You're welcome. I'm going to go through the audit findings. I'm just going to do the highlights of what we did with our plan, how we evolved, and then eventually our audit report to the ending conclusion. We are happy to report we're ready to sign off on that audit report, just waiting for your official approval today of the financial statements, and then just a few signatures, legal, we get the signatures. There were no changes from our plan that we presented in September, which means there was nothing unique or anything unusual that came up or was sprung upon us, so it went as planned. No suspected fraud, alleged fraud, illegal acts, non-compliance with regulations, so that is all clean. There was also no significant deficiencies in internal controls that were noted, which is great to be able to report that back. There were no matters arising from discussions with management that we feel need to be brought forward to the attention here today. There was also no significant adjustments either, so that meant the information we received is the end product that you're seeing, so that means you received very good information throughout the year as well. Final materiality was 1.3 million. That didn't change from the plan. Some accounting estimates that we focused on, because they're estimates and require professional judgment, we spent extra time in that area. So we focused on things like amortization of property, plant, and equipment, deferred revenue. We also looked at repairs and maintenance to check to see that there's nothing that's being capitalized. When we look at the financial statements, we don't just look at the numbers, even though that's the fun stuff. We also look at the notes as well. And we were able to determine that the notes were clear, neutral, and consistent with the operations and the numbers of financial statements. For those that receive the full audit findings statement, you'll see we've got attached to it the management representation. That's just the full letter that we get management to sign. That's one of the things that's outstanding. But that's because we won't let them sign before today, because it has to be signed today. So this leads us to the auditor's report. So we've audited the financial statements, including the statement of financial position and all the various schedules 1 through 7. In our opinion, the financial statements do present fairly in all material respects. The financial position of the jurisdiction as of August 31st, 2022, results of its operations and cash flows. And we do feel they're in accordance with Canadian public sector accounting policies. The only thing we highlight in the audit report is there are 2 unaudited schedules. Those are unaudited at the direction of Alberta Education and was not a scope limitation from management. Nor was it us just saying we didn't want to do it. That's supposed to remain unaudited. Okay. Management in the report, we then also say management's responsible for the financial statement presentation as well as setting internal controls. Those of you in charge of governance are responsible for overseeing management. So basically, it is a clean audit opinion. We would also like to formally thank management and the staff for their full cooperation and making it a good environment to work with. Apparently a little too good to work with. There's a few familiar faces around the building, but that's another matter. Any questions or concerns?
I'm actually going to ask you the same questions that I asked at the audit committee hearing, but for the benefit of the folks who might be watching online. The first question just has to deal, and every division that I've worked in, the same questions come up. We have a budget, and then we come this time of the year, and there's either a deficit or a surplus that's occurred. And so, from your perspective, the surplus that's there, is it reasonable based on what was budgeted that we would end up with the surplus that we have?
For me, when I see kind of any variance from budget, I do look at what the reasons are for the difference, right? To check to see if the budget was well thought out and reasonable assumption. And from the work I've done, I could see the reasons for the variance was reasonable because it was based on information that you guys didn't have at the time. Alberta Education doesn't give you all the information you need in May when you prepare that budget. The other thing I tend to also look at is compare your actuals to the revised budget that you do in November, because that's once you know a bit more information about your funding and your actual full-time students, right? That really dictates your costs and your expenses, and I compare to that as well. And I didn't see any concerns from the auditor's perspective on it.
And then the second question was just dealing with our surpluses and where we're, I guess, saving money for repairs down the road. Was there any issues? Because the amount has gone up, that's in surplus and in reserves. And so
I don't have any concerns because you guys are earmarking it for specific purposes and being fiscally responsible and prudent by identifying the best uses for it and you're prioritizing it. So that gives me greater comfort over it as opposed to, back to a more technical term, willy-nilly spending it here and there just to get rid of a surplus. It makes more sense to me.
Great, thank you. Amanda, would you focus the financial statements?
Okay, so the package you have in front of you is quite thick, and as we go through it, if there's any questions you have, please feel free to interrupt me at that point in time, and we can go through the question that you have. And there'll also be an opportunity at the end. So just a general comment on the financial statements. They're prepared under what's called Public Sector Accounting Standards, PSAS. So it's just a fancy term meaning that there's a set of guidelines that we have to follow so that we are able to provide consistency with our statements across government entities, so that when you're comparing our statements against another school division statements, they present similarly, so you're comparing apples to apples. So schools, universities, colleges, and hospitals, and anybody else who falls under that such sector are all required to report under PSAS. The package that you were sent is quite robust. It has 5 main statements, 7 supplementary schedules, 2 unaudited schedules, 5 schedules for information purposes only, and 19 pages of notes. So it's a rather large package, but as you go through the statements, you'll find that there's references throughout to the other notes or the other statements so that you can see further details on where those numbers come from and what they're made of. The first statement that we'll look at is our statement of financial position. And if you've got a copy of maybe page 3 of the largest package, and this is essentially a snapshot in time on a particular date. For us, that's August 31st. If we were to look at this a month later or even a day later, those balances would change just based on the bills that we pay or any revenue that comes in through the door. If we were a for-profit organization, you would know this better as a balance sheet. So there'd be assets, liabilities, and equity. However, ours is split a little bit differently. So we have the financial assets and liabilities at the top, and then the non-financial assets at the bottom. So financial assets meaning just those items that are easily converted to cash. So our first balance there is cash itself, which is at $6,681,000. So an increase of $986,000 from the previous year. And the increase in that is just, it's largely due to the surplus that we quickly mentioned previously, but also just a timing difference too in terms of if we look at our accounts payable balance, it's higher in the current year than last year. So that just means that the timing of when invoices were paid is different. And so that would lead to more cash in the bank. There were a couple of grants that we received at the end of the year. And because we hadn't fully spent those would also be sitting in the bank unspent. Accounts receivable is sitting at $1,534,000. And that's money that's owed to us from other individuals. So the largest balance being municipalities. So a portion of our revenue is filtered through property taxes that the municipalities collect on our behalf and then forward to us. And so because some of them hadn't forwarded that revenue as of August 31st, it's sitting in accounts receivable. There was also a modular at Notre Dame that was in the midst of being constructed. And so the funding that's attached to it was also outstanding at the end of the year for about $300,000. The next section is liabilities. So those balances that are owed to us, and accounts payable and accrued liabilities being the first at $4,207,000. So this includes trade payables as well as unearned revenue. So any invoices that we had at end of the year that we were required to pay by August or as of August 31st were included in there. And then unearned revenue being anything that we had collected that's for the upcoming school year. So with our international ed students, they're required to pay their fees 30 days prior to arriving or prior to the start of the school year. So because we've collected that cash ahead of the school year, it sits in that balance on the financial statements. We had an increase in international ed students this year, so the balance that was collected prior to the start of the school year also increased. The fees that the Academy at Notre Dame collects prior to the start of the school year would also be sitting in there too. Unspent deferred contribution relates to any funding we've received that are that have restrictions or conditions on them for what they can be spent on. So a lot of the times this will be our IMR or CMR funding. There were also a few grants related to the new curriculum, so we have to spend those on professional development or resources. There was a mental health grant received from the college for $25,000. And then also the safe air return funding hadn't been fully spent by the end of the school year, so it's sitting there. You might be thinking, like, if we've got the cash, how is it a liability? But because there's conditions against how we can spend it, that means that if we don't spend it according to that purpose, that we have to $1,915,000. And that just allows financial statement readers to get a quick pulse on the organization, whether or not we're able to meet our liabilities as they come due. And so because it's a positive value of 1.9 million, it means that we are in fact able to, we'd be able to pay all of our liabilities should they come due September 1st. The bottom section of the statement is our non-financial assets. So those items that cannot be easily converted to cash. Tangible capital assets being the first there at $39,956,000. So this includes our buildings, equipment, computers, site improvements, vehicles, anything that we buy that has a value greater than $5,000 and will be used for more than one school year will live on this line item. So rather than if we had a building that we purchased for $1 million, rather than it showing up as an expense on our statement of operations in the year that we buy it, it's brought in over the useful life of that asset. So typically on our statements, a building would have a useful life of 40 years. So that would equate to $25,000 per year of expense being brought in. We can see there that the balance decreased by $813,000 from the previous year. And that's comprised of several values coming together. So the first, we had capital asset additions of $1,340,000. So there was the roofing project at St. Louis, the modular at Notre Dame, and also the boys and girls washroom at St. Michael's School. Netted against that is our amortization expense of $1.7 million. So that annual use of the assets depletes that balance, as well as we disposed of the former St. Louis School for $550,000. Prepaid expenses is anything that we've paid in advance of the school year happening. So typically in May, the schools as well as the board office will start to look at the year ahead and purchasing anything that they need. So this could be supplies, textbooks, it'd be the insurance premiums or software licenses that are coming up for the upcoming school year. Those are all included prepaid expenses until the year for which they relate, then will be shown as expenses. And finally, our spent deferred capital contributions. So this relates to that line above that was the unspent capital contributions. So if we receive a grant that has the requirement that we spend it on capital, it'll sit up top until we actually do spend it, at which time it comes down to this line here. And then just as we recognize the expense attached with tangible capital assets, we would then also recognize the revenue associated with this grant over the useful life of that asset. I've actually got a separate diagram to hopefully explain this a bit clearer. So if we received $1 million grant that had to be spent on a building, say, it would sit in that unspent deferred contribution line on the financial statements until we spend it. At that time, you would notice the decrease in our cash of $1 million, but we'd also increase tangible capital assets by $1 million. And then that unspent deferred contribution balance would move down into spent deferred contributions. Then, because a building would typically have a useful life of 40 years, which equates to $25,000 per year, that building account will decrease as we amortize it annually by $25,000, showing that expense in the income statement. But that spent deferred contribution balance will also decrease by $25,000 each year as we recognize it as revenue. So after the 40 years are said and done, we'll have recognized $1 million of revenue and also $1 million worth of expenditures. The very last value on this statement is the accumulated surplus of $3,778,000, and we'll get into the details of that because it's made up of a couple of balances. Just a little bit here. From this statement, there are a couple of financial health indicators that we can look at to get a gauge on how well the division is doing. One being the working capital per student. So this is again looking at our liquidity or ability to meet our liabilities. So we can see there on a per student basis, we would have $768 left after paying our bills in resources or assets. And then you can see there over previous years how we compare to jurisdictions of similar size, as well as those across the province. The adjusted net financial asset is just a different way of looking at this. It's in a ratio context. So our value for the current year is 1.3. Typically, as accountants, we like to see a value of 1 or greater, but not more than 2. As if it's greater than 1, it means that you're able to meet your pay off your liabilities. But anything greater than 2 suggests that you're not leveraging your resources well, and that you've got a lot sitting in the bank, essentially, that could be used for other purposes. We can look at our capital assets and determine first how new our assets are, as well as how well we're maintaining them. So if we think back to that $1 million building that we purchased, the day we buy it, it would have a value of 100%. And then from that point on, and for the next 40 years, it would slowly start to decline. However, we know that we receive grants to maintain our buildings. And so as we start to inject that funding and take care of them, that value would once again increase as we capitalize those projects. And so it's a combination of 2 factors, again, how new the buildings are, but also how well we're maintaining them. So you can see there the ratio compared to other jurisdictions across the province. This is the same information except it's for our equipment and vehicles, and you can see it's a lot lower of a percentage, but when we get to the net asset section and our reserves, we'll be able to see that we have a plan in place relating to that. Any questions relating to this statement? Okay, so statement of operations. So again, if we were a for-profit organization, this would be our income statement. It looks at our revenues and our expenses. And for us, it has 3 columns of information: the budget, current year actuals, and prior year actuals. And if we look back at the context to which that budget was developed, we can see that it's the information that we had back in May of 2021, and that it was based on what we knew at that point in time, like Delaney had said. And so at this point in time, we had an adjusted accumulated surplus, or money in our reserves, of $1.3 million, and that excludes the $600,000 in change balance within SGF. We were also able to see that the actual enrollment that we had in 2020-21 was lower than what we've been funded on. And so because of that, we knew that there would be a portion of our revenue that we'd have to return to Alberta Ed, or that would be clawed back. But also in the funding announcement for 21-22, we were told that we'd be held harmless, but there was no context as to how that would be rolled out for accounting purposes. So our assumption was that we would keep that revenue in 2020-21, and that 511 wasn't in the 2021-22 budget. Our staffing was based on 139.4 certificated FTE and 152.9 non-certificated FTE. And with these factors, as well as all the other priorities that the board had articulated, there was a $355,000 deficit that was approved in May. So with that budget, there was $32,997,000 worth of revenue. And when we compare that against actual revenue of $34.70 million, we can see that it's an increase in revenue of $1,764,000. Before we look at why the change in revenue, I just wanted to outline again that the total funding that we received from the government of Alberta last year was $31,491,000. However, within that revenue envelope, there's a fund called the Alberta School Foundation Fund, and all separate school divisions within Alberta have opted out of that particular funding, and rather collect it through property taxes that are requisitioned from the municipalities. There's the money that we receive through property taxes is directly deducted off the funding that we receive off the government of Alberta. So we're not any further ahead or behind in terms of revenue by collecting the property taxes from the municipalities. It just requires us to show it separately on the 2 lines. So if we were a public school board, there would be 1 line of government of Alberta funding of $31 million at the top, and that property tax line would be empty. So just to keep that in the back of your mind when you're looking at the statements on a regular basis, talking with your friends about them. But if we look at what transpired throughout the year that caused this swing of $1.7 million, we first look at enrollment. And so our actual enrollment was 15.5 FTE greater than what we had budgeted for or had been funded on. But based on the composition of that enrollment change, it actually meant a clawback in revenue because the biggest change was within our PUF students. And so that was also a program that we knew would be impacted by this clawback. We were also given guidance on that 2020-21 held harmless funding that we were to receive, and that in 2021, we were to show a deficit or a reduction in funding based on that 511, and in 21-22, we were to show the actual revenue. And so the deficit in 1 year and the surplus in the next would offset each other, and our reserves would be held harmless in their eyes. There are also several grants that were announced subsequent to the budget being approved. The fuel price contingency grant for $32,000, the learning disruption support for $127,000, and then the COVID PPE supply. So at the start of the school year, we had a rather sizable shipment of masks and COVID tests that were distributed to staff and students, and that had a value of $305,000. And so we have to record that as both revenue expense on our financial statement. The Alberta School Council Engagement Grant of $3,200, and also close to the end of the school year, there was a ratification, would that be the correct term, on the ATA collective agreement. And so there was a change in their grid of 0.5%, and the funding attached to that was $4,600. In addition, there was an interchange agreement signed with Alberta Ed that had a value of $110,000, and then the proceeds from the sale of the former school of $550,000. So those are the factors that caused our revenue to be $1.7 million greater than what the budgeted revenue was. If we look at our revenue in just a slightly different format, we can see there that 90% of our funding comes from Alberta Ed when you combine it with the property tax line. 5.9% from other governmental Alberta sources, so that'll be Alberta infrastructure as well as children's services. And then 2% comes through fees. The 7.25% under other, that'll just be the proceeds from the sale of the former St. Louis school. The bottom part of the schedule is looking at expenditures, and the line items here are delineated by program. So instruction being the first one, and it seems on an every other year basis, they like to change how it's split. So in this year, they've decided that they would like kindergarten shown with ECS, whereas last year that line was just pre-K, and then we had kindergarten grades 12 in the second line. So if you're looking at the budget or the prior year figures, you'll notice that they've been reclassified so that they align with that restructure. We can also see that budgeted expenditures were $33,353,000, which is $561,000 lower than the actual expenditures of $33,915,000. So again, we can look to see why that change occurred. And with our utilities, we were over budget by $246,000. Consumption was actually down 12%, but when we look at the commodity price increase from September to August, we saw a 65% increase in electricity and a 98% increase in gas. So any savings that we would have found through reduced consumption was quickly eroded by just the price increase on electricity and gas. We've now included the expense related to the COVID masks and testing that we distributed of $305,000. School generated funds were $280,000 over budget. So the school administrators were asked to submit a plan on what they thought they'd be spending with SGF. And those plans were largely based on prior activity. And so because the last 2 years were based on COVID level of activities, the expenditures were low for things such as extracurricular tournaments or the grad ceremonies. It wasn't the full scale grad ceremonies that we likely see. And so as we return to more normal rates of activity, we were also able to see that the expenditures for those increased. The instructional pool was over budget by $120,000. There was a $35,000 ERIP approved in April. And in addition, the certificated budget was 139.4 FTE, but on average, there was 140.41 FTE actually hired. International Ed was over budget by $117,000. There were 3 additional FTEs in students in the program, which just that alone, there's a direct correlation with the homestay expenditures and the traveling for pickup and drop off. There was a half FTE of administrative assistant support brought into the program. Activities and trips were over budget by $5,000, and the True North software was purchased for $5,900 to assist the program. Preschool was over budget by $161,000. There was a grid adjustment that was approved in November for the early learning educators and the therapy assistants. That was a significant push in that overage. But there were also savings that offset these over budgets. So there was the chaplain position that remained vacant for the 21-22 school year, as well as there was the French monitor grant that we had received where the program itself wasn't able to find a suitable candidate to be in our schools. And so that position remained vacant, so there was no expense or revenue attached to it. Cyber school payments were under budget. And then, as I mentioned earlier, with our change in enrollment, the PUF budget knew that it would have to look at reducing its expenditures. So it was intentionally reducing costs there. In addition, the amount of our IMR projects that we expensed was $220,000 lower than we had budgeted for. When we look at our spending by program or where we spent it, instruction accounts for 74%, plant operational maintenance 14.7%, transportation at 3.9%, administration 4.8%, and external services 2.5%. We can look at where we spent our money, and that would be on human capital for 75%, services, contracts, and supplies at 19.8%, and amortization brings up the remaining 5%. When we look at our surplus for the year, it came in at $846,000. And if we look at Schedule 3, that gives us better detail onto where that surplus originated from. So again, this schedule looks at our revenues and expenditures by program, the first being instruction. So when we combine ECS with grades 1 through 12, there was a surplus of $810,000 between those two program lines, with the bulk of that coming from the $511,000 held harmless funding. So we knew there was a deficit in the prior year, and so having the revenue in the current year without offsetting expenditures meant that there would be a surplus. School budgets had a surplus of $83,000, SGF of $68,000, and international ed had a surplus of $121,000. Operations and maintenance also had a surplus of $102,000. And looking into that in greater detail, we can see that the sale of the former St. Louis, those proceeds are recorded there at $550,000. As well, there was some savings within wages. So there were a few positions that were vacant, as well as with the transition between different staff members. The outgoing staff member was at a higher grade than the incoming staff member, and so the changes in that contributed to the surplus. This was offset, however, by the utilities exceeding budget by $246,000. As well, we had intended to subsidize PO&M by $136,000, so we had expected it to be over budget by that amount. And then amortization expense of unsupported assets of $84,000. Looking at our schedule of net assets, so that's Schedule 1, gives us a better detail of that $3.7 million that we saw on our statement of financial position. So on the first page of the schedule, you can see the number at the bottom there, that 3.7 million, and then to the right, it shows you the balances that make it up. So the first being our investment in tangible capital assets. So these are board-funded assets. So previously, when we were talking about our buildings, we were talking about receiving grants that had stipulations on them. This is when we take grants that have no capital stipulation on them and spend them on capital assets. So things like our photocopiers or vehicles, computer or IT equipment, those would fall under this investment in tangible capital assets. Unrestricted surplus is similar if you're thinking of your personal finances to your checking account. So it's money you have in the bank, but you don't necessarily have anything earmarked for it. And so that balance there is $865,000. Sorry, $810,000. Next to it is our restricted reserves. So this is more like your savings account where you put it aside in the bank and you have intended plans for it. So the operating portion of our reserves is $1,456,000 and our capital reserve is $576,000. It's important to note that when we're talking about our reserves and what we have access to for initiatives and whatnot, that we talk about our accumulated operating surplus. And so that's made up of our unrestricted surplus and our operating reserves. So like that checking account and then the operating part of our savings account. And those two balances combined are $2,392,000. But we're not able to include the SGF balance within there. You'll notice throughout the notes that we're required to reduce that balance by our SGF of $680,000. So the actual accumulated surplus that we have available is $1,711,000. When we reflect back on our budget and where we had intended to be with our reserves, we knew that with the initiatives and priorities that we had planned, that we'd be using $362,000 of our operating reserves and had hoped to move $134,000 to capital reserves so that we would have $1.6 million available for the 2022-23 school year. When we again reduce it by the SGF, that would mean $1,055,000. The second page of this schedule provides greater detail on where we have that money earmarked. So again, it goes by program. So we have school and instruction being first up, and we have $1,081,000 in operating reserves there. And this is comprised of the balances within the schools. So there's $333,000 that they've got in reserves. SGF is at $681,000, and then the band program has $41,000 set aside for future replacement of their instruments. The $71,500 there for capital reserves relates to the childcare modular over at St. Mary's. We were given funding for that modular, but on an ongoing basis, any maintenance has to come from Medicine Hat Catholic. So we've been putting money aside each year so that when we have to replace the roof or the flooring or whatever it might be, there's reserves set aside for that. And then operations and maintenance has money tucked aside as well. So on the operating side, we have 374,000. So if we reflect back on those low ratios for our equipment and vehicles, we know that we're going to have to replace them. And we also know that the IT department is in the midst of replacing our smart boards as well as our computers. And so this fund will help to replenish that. The $505,000 in capital reserves relates to the proceeds from the sale of the former St. Louis. And so a portion of that is earmarked based on Alberta Ed, and then the remainder from Medicine Hat Catholic.
Amanda, can I ask a question regarding that St. Louis amount? Not all of that is our money, but do we account for it on these schedules as if it were?
It's reflected on this schedule, but then the nuance of that is in the details of the notes and I guess just in the accounting records, I guess. Okay.
Can I ask it? The government gave us permission to use their portion of the money, correct? So how does that get treated in accounting?
We haven't received anything official to that we can use their funds yet.
We got a letter from the minister, I believe. I thought we got a letter from the minister saying that she gave her permission for us to use.
I thought we did too.
We'll have to go back and look at those records. They are at this point here segregated between Medicine Hat Catholic controlled funds and Alberta Ed controlled funds, but we'll go back and look at those.
And then once we do, let's assume that, I'm not imagining things, and we didn't have a letter saying, then how do we treat that in accounting? Does that go into our accounts?
Yes, yeah, well, it's like Amanda's saying, it'll show up as just the 502,000 on this schedule, but offline we're keeping a record of which amount belongs to who. So it'll just be an offline accounting entry.
So there's just a couple of ratios or whatnot that we can look at our trend analysis. So this shows over the past 5 years just how revenue expenditures have varied, and then also the surplus from year to year. So typically if there were changes in revenue, it's related to enrollment or grant announcements, and expenditures are related to hiring decisions. And then looking at our accumulated operating surplus compared to expenditures, Alberta Ed typically wants to see a value between 1% and 4%. However, with us having a value of 5%, it just means that we've been putting money or reserves aside so that as we have to replace our computer equipment and any other assets, we've got reserves to be able to do so. So that's why our value is higher, is because we're intentionally putting money aside for that purpose. And that concludes my presentation. So I don't know if there's any other questions.
I have another question. A couple of years ago, perhaps it's maybe longer than that, I asked the question of Greg whether or not the $251,000 that we had agreed to pay for the McCoy modernization had been paid, and at that time there had been no request for that money. Has that changed, or have they asked for that money? Have we paid it, or where is it?
That money has not been paid.
It's sitting in the unspent
The unspent.
deferred contributions.
Is there a statute of limitations on that?
We could have that discussion with the minister. No, the ministry has not come asking for it as of yet. I have not asked for them to ask for it. But the proceeds, and I get the exact amounts, about 220,000. So it's about 220,000 that we had fundraised, and like you mentioned, the board commitment to pay 251.
Thank you.
Any other questions? Okay, then it looks like we're at a motion here.
So the motion that is being recommended by the audit committee is be it resolved that the Board of Trustees for the Medicine Hat Catholic Board of Education approve the 2021-22 audited financial statements, notes as presented, and the inherited transfers to the reserves. The Board of Trustees further approves the unaudited financial schedules as presented.
Somebody want to pass that?
I'll make that motion, Madam Chair.
All in favor? Or I guess, is there any questions first? No, go ahead.
Well, just one comment. Thank you very much for this. Thank you to Myers North. And this is an accolade. I think it is tremendous that everybody combined in this division worked hard, and with the work, I forget which firm we hired to work on utilities and so on. But I think a 12% reduction in utility consumption is excellent in this day and age.
That was Johnson Controls.
Johnson Control.
And that was an initiative Dwayne led.
So that's, kudos to Dr. Zerchi and everybody else involved in the schools. It's an unbelievable number.
Thanks, David. And I think the whole board agrees with that. Okay, let's call, one more.
Well, I'd like to thank Greg and Amanda and the staff for doing this stuff. It's amazing. So, and you explain it in a way that is palatable even for us uneducated in numbers. Delane made a comment about numbers being fun stuff. I want to challenge that.
I don't think this is the floor to challenge.
If the chair will entertain a motion, I will make it formal.
Just as a final comment, I asked a question to Delane in the audit committee meeting, but to receive a clean audit without any significant recommendations or issues that are being raised is a pretty significant thing. There are a number of jurisdictions that receive a list of things after this process is done that need to be addressed, whether it be concerns or controls or whatever the case may be. So it really is a testament to the work of Greg and Amanda and their team that we can have an audit of this size and not have any significant issues. Would you concur?
Okay, I'm going to call the question. All in favor? Passed, unanimous. And thank you very much.
And thanks to Amanda for all the work. I really appreciate how much to Dylan as well.
Absolutely, everybody. We are very blessed in this area. Okay, we can move on. You can stay if you want. It's not, it might not be as exciting as numbers.
We listen to your fun.
But again, thank you, Delane. Okay, Dr. Zrichny. Annual Education Results Report.
Thank you, Chair. So the report is attached, and I guess a couple of things to highlight in there. You'll notice in a few spots that there's a date that was highlighted in November 29th. So Chelsea had put that in and then highlighted it, just pending approval for the meeting today, and then the highlight would be removed. Chuck has previously highlighted the results for the jurisdiction, so unless you folks have questions on them, I think overall the results, as we talked about in our last board meeting, are very strong for our jurisdiction, and even in a couple of areas where we decreased a little bit, when we really boil down into the exact number of people that participated in the surveys, the numbers are very small in the schools, and so in some cases where there was a slight decrease, it really is reflective of a couple of people changing their minds slightly as opposed to being a significant issue. Nonetheless, as we're going through the school plans, the schools, we're talking with the administration of the schools to ensure that they are addressing them. And in the schools where there were some slight decreases, they are taking them very seriously and working to, in one case, engage parents in a bit more meaningful way. And also just coming out of COVID, I think, a lot of people have mixed feelings about levels of engagement from schools and so on from that process. So we're looking forward to this year's results to see if the efforts in the schools make a difference. With respect to the final submission, the financial statements that you just approved will be attached. And then once we have that, then the final summary will also be uploaded as part of the package, because there's a summary document that sort of takes a snapshot of the results of the report. And just as a final comment before we got for questions, I really wanted to thank Chelsea in particular for all of her hard work on this report. We are one of just a few school divisions in the province that are actually submitting on time this year. A number of schools have asked for an extension to get this report done, just given everything else that's been going on in the province. And Chelsea was able to do all the heavy lifting for us and get it done on time. And so not only are we a high-performing jurisdiction with respect to the results, but we're a high-performing division in terms of getting things in on time as well. And that's all due to Chelsea's work. So thank you, Chelsea.
Thank you. Okay, comments? Go ahead.
Question. I agree, this is a very good report. As you've heard me say in the past, this division, through many different changes in administration, both at schools and in the central office, has maintained excellent results over a 12-15-year period. One question I have is, and it doesn't necessarily be today because I wouldn't mind hearing at a meeting in the future, what kind of support, academic support we give to our FNMI students. So I'm curious if we try and help them with tutoring or in-school support, that kind of thing.
What are our numbers with that? Like, what are our student numbers? I don't even know that.
Off the top of my head, I think when we looked at the completion rates there, was 6 students.
6 students.
Yeah, so
I wondered about that one.
Yeah, I'm sorry,
6.
6.
we only have 6 students?
Well, that's the difficulty with, because students that are First Nations Métis in have to self-identify, and a large number don't. And so the results, even on a provincial basis, are not accurate by any stretch of the imagination because the majority of students refuse to identify.
Just 10 years ago, we were up to 80 FNMI students. I agree with you. My experience was that when I first became superintendent, the feeling in the division that we didn't have many. And then Brian Clark was one of the Alberta education officials who worked with me, and we met in this. In fact, I remember I was there and she was here, and she said, "David, we weren't even applying for the grant." And she said, "Why? And I don't know where she got her numbers from, but she said, we think you have about over 50 FNMI students. And we made especially Mrs. DeWald made a more concerted effort in, we put it on our registration form and so on. And at one point, we were up to 80 students.
Are you asking how many of self-identified individuals?
Oh,
Oh,
sorry,
157.
157.
Okay.
yeah, but I thought you were just talking about the graduation there.
Yeah,
Yeah.
that one's on the 3-year.
But I agree 100% with you. It's actually, full disclosure, a burr in my saddle to have the FNMI results reported provincially. And I've told this to our education manager every time they come to visit with us. If there was a report like that generated about Ukrainian students,
Right.
I would file the human rights complaint myself. Because, as Canadians, we don't track that type of information publicly. It's big in the States, but we don't do that. And why we only report on one cultural group and not all the rest. And so, if I looked at these results, if I was someone who was First Nations, I wouldn't want to self-declare so I could be part of that group because, and so it's good information to have statistically so that we're aware. But I really find it offensive that it's reported publicly. So if we're going to do it for one, we should do it for all. Yeah.
Well, then in that vein, I've been challenged by your answers, then I'm gonna change my request to ask that the board have a little bit of a presentation. It can even be in a report on what kind of academic supports are available to students in schools who are struggling. I remember, sorry to put you on the spot, Mr. Holland, but when you were a principal at St. Mary's, you used to track results, and then if X number of students weren't doing well, you engaged the teachers and said, what kind of, because one of your school goals was not to have anybody fail, correct? If I remember right? So I'd like to see if there's something like that going on in schools where students who are struggling are identified and what kind of supports are. Okay, thank you.
Okay, and go ahead.
I think the one thing that I find very important with this and very much positive, we're up 6% as a division from last year. So it's 140 kids-ish. So as a division, we grew the size of St. Michael's School. To me, put all of this together that we've been talking about today, our budget, we talk about school plan, we talk about our results, we talk about how we treat kids, health and wellness, teaching and learning, all of these things together. Are we doing a good job? Well, more parents are sending their kids to us than they have. And for me, that's is a very big positive and inclusive for all of our staff, everybody that contributes to this division, because you don't see that. We don't see that in our neighbor division. We have a good product here, and parents are seeing that, and it's because of what we all do. So I just want to make that comment.
Yeah, I totally agree with that, and we don't tell our story, and we need to start doing that. And we are starting to do that, but we need to do it more. Every time we open our mouths, we should be talking about how great we are. And I know as Catholics, we're not supposed to do that, but you know what? We got something really special here, and people need to know. Okay, any more comments on the results? Okay, we need to have this motion then. That the Board of Trustees of the Medicine Hat Catholic Board of Education approve the 21-22 Annual Education Results Report as presented. We would like to pass that.
I'll make it.
Okay, Deacon Robert. Any other comments? Okay, all in favor? Okay, so we're just going to add one here. We're going to go in camera. So I'll need, sorry.
That's fine, I just want to make sure we are going.
Yeah.
Madam Chair, I'd like to move that we go in camera.
Okay, thank you.